Good afternoon, traders. This is your free video from Seasonal Swing Trader. Today is Thursday, April 26, 2018. Today we're going to take a look at a post-earnings seasonal play in BMY. That's ticker symbol BMY, Bristol Myers Squibb. And we're looking at around a 7 to 8 week possible hold time in BMY. From a seasonal perspective, this trade has risen historically by approximately 3.5%. And this is based on 45 years of stock performance. The probability is on the lower end of the spectrum, but it is above 50%. We're looking at around 60 to 63% probability of this trade working out, meaning favorable to the upside. We'll be looking at some at-the-money put spreads or slightly out-of-the-money put spreads in BMY, so we're not too concerned about the percent rise. Can even trade a little bit flat to negative depending on how close we get. But now that we have the seasonal stats, we want to take a look at the chart. Right now, this is a daily chart, a live daily chart on BMY. And you can see we've just been absolutely crushed here to the downside over the last month or so, trading from here in the high 60s all the way down to $50. We found some support down here at the $50 level. Again, we had earnings this morning, so earnings are out of the way. We can still have a little bit of post-earnings volatility, but don't expect it to be anything too major. If we pull the charts in here, you can see that we've come down to an area of support right at this psychological $50 level. So we've had some support here in October 2016, again some support in early January of 17, and then right around here in this area 1, 2, 3, we did breach that support, but we came down and found support again. If we go over to the weekly chart, we should see something of the same. Notice here this large spike bar down on the weekly chart back in August of 2015, and then all of these areas right around here, what we'll do is take a drawing tool. So we had a touch here. Touches here did break through but rebounded sharply. Again, we broke that support, came down sharply, then rebounded from there, came down, did our small retest here, retest, retest, and now here's where we are again. So going back historically, this seems like an area for whatever reason here around this $50 to $51 area as a pausing point in the stock to go higher. Coupled with that basic support and resistance lesson along with some seasonality, we do like this trade. We do like taking a low risk trade to the upside. We go to back to the daily chart here, and we try to define some areas that we can look to sell against, and that's going to be right at or below this $50 support. Looking at the May options, we only have 22 days left on the May contract, so that's not going to yield us a lot of premium unless we get a little bit more aggressive. We look at the 51.49s, for instance, that's going to bring us about 50 cents. So you're risking $2 to bring in 50 cents. Max risk on the trade below 49 is $1.50, assuming you got 50 cents of credit. But of course, though that is the max risk, if we were in a gap down scenario, we wouldn't want to just watch this evaporate down below 49. We would want to manage it based on support levels and or premium inflation. So that's what we've got today in BMY. Hope it helps. If you have any questions, reach out to us. Follow us on Twitter, Instagram, Facebook, and YouTube, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.